Hello everyone, my name is Ajmedin and this is National Financial Reporting Authority Rules 2018 and Ministry of Corporate Affairs notified these rules and it was published on Official Gazette on 14th November 2018. The power exercised were confirmed under section 132 subsection 2 and 4, 139 subsection 1 and 469 subsection 1 of the Companies Act 2013. So before we start, let us understand the classes of companies and the bodied corporates governed by NFRA. NFRA is a short form for National Financial Reporting Authority, which we are going to use in this video. Rule number 3 says NFRA has power to monitor and enforce compliance with accounting standards and auditing standards. NFRA oversee the quality of service under section 132(2) and they can undertake investigations under section 132(4) of such section of the auditors of following class of the companies and the body corporate. In next slide we are going to discuss about those class of body corporates and companies which are governed by NFRA. Classes of companies and body corporate governed by NFRA. We can categorize these things in 5 classes of the companies. Number 1, listed companies. Companies whose securities are listed on any stock exchange in India or outside India. Any unlisted public companies having paid up share capital not less than rupees 500 crores or having turnover of not less than rupees 1000 crores or having in aggregate outstanding loans, debentures or deposit of not less than rupees 500 crores, and we need to check these conditions as on 31st March of immediately preceding financial year. Then it comes to insurance, banking companies or companies which are engaged in generation of supply of electricity, or the companies which are governed by any special act for the time being in force, then they are also governed by NFRA. Coming to any body corporate or a company or a person or classes thereof on reference made by authority, that is NFRA, by central government in public interest, they are also governed by NFRA. Then it comes the 5th case where a body corporate which is incorporated outside India and which is a subsidiary or an associate of a company which is incorporated in India of the classes of these 4 companies, and if the income or the network of such subsidiary or an associate exceed 20% of consolidated income or consolidated net worth of such companies or body corporate which are covered under these above 4, then they are also governed by NFRA. So 20% is the limit which have been described for the purpose of income or net worth thereof. Coming to rule number 4, then the NFRA shall protect the public interest and protect the interest of the investors, creditors and others associated with the company by establishing high quality of standards of accounting and auditing and exercising effective oversight over accounting functions performed by companies and body corporates and auditing functions performed by auditor. In particular, if I say rule number 4 says that they need to, in particular, NFRA shall maintain the particulars of auditors appointed in companies which are covered under Rule 3. The NFRA shall recommend accounting standards and auditing standards for approval of central government, and then NFRA shall monitor and enforce compliance with accounting standards and auditing standards. NFRA shall oversee the quality of service of professionals associated with ensuring compliance with such standards of auditing and accounting and suggest measures to improve in the quality of services. There have been detailed rules which have drafted, which have notified for these all. For example, recommending accounting standards, the rule and process is there. Monitoring and enforcing compliance, the rule and process are there. Monitoring and enforcing compliance with accounting standards are there, and power to investigate. So there are a detailed rule there of which we are going to discuss in following slides. And they need to promote awareness in relation to compliance of auditing standards and accounting standards, and they need to cooperate with national and international organization of independent audit regulators in establishing and overseeing adherence to accounting standards and auditing standards. Next, rule number 5 is annual return by auditor. Every auditor referred to rule number 3, which are governed under NFRA, shall file a return with NFRA on or before 30th April every year in such a form which may be prescribed by central government. Next, it comes to rule number 6 on recommending and accounting standards and auditing standards. For the purpose of recommending these, the NFRA shall receive recommendations from the Institute of Chartered Accountants of India on proposals for new accounting standards or auditing standards, or for amendments to existing accounting standards or auditing standards, and they may seek for any additional information from the Institute of Chartered Accountants of India on the recommendations received earlier if required, and the authority shall consider the recommendation and the additional information which have been received by them in such a manner that it deems fit, and then they need to recommend these standards to the central government. There is also a requirement to file NFRA 1 form number within 30 days, and every existing body corporate other than a company governed by these rules inform NFRA within 30 days of commencement of these rules in form number NFRA 1 the particulars about their auditors as on commencement of these rules. Now it comes to rule number 7, monitoring and enforcing compliance with accounting standards. NFRA may review the financial statements and, if so required, direct a company or a body corporate or its auditor by a written notice to provide further information or explanation or any relevant document related to such company or a body corporate within such reasonable time as may be specified under that written notice. NFRA may require the person to be present of officers of a company or a body corporate and its auditor for seeking additional information. NFRA shall publish its finding related to non-compliance on its website as in a manner they deems fit, unless it is a reason not to do so in a public interest, and it records those reasons in writing as well. Where NFRA finds or has a reason to believe that accounting standards has or may have been violated, it may decide on the further course of investigation or enforcement action through its concerned divisions. Then it comes to rule number 8 on monitoring and enforcing compliance with auditing standards. So, for this purpose, NFRA may review the working papers, including audit plan and other audit documents and communication related to audit. They can evaluate the sufficiency of the quality control system of the auditor and the manner of documentation of the system by the auditor. They can perform such other testing of audit, supervisory, and quality control procedures of auditor as may be considered necessary or appropriate. The authority, that means the NFRA, may require an auditor to report on the governance practice and the internal processes designed to promote audit quality and to promote the protection of its reputation and to reduce the risk, including risk of failure of auditor, and may take such an action on the report as may be necessary. The authority, that means the NFRA, may seek additional information or may require the personal presence of the auditor for seeking additional information or explanation in connection with the conduct of audit. The authority shall perform the monitoring and enforcement activities through the officers and the experts with sufficient experience in the audit and relevant industry. The authority shall publish its finding related to non-compliance on its website, or unless it has a reason to not to do so in a public interest and it records such reason in writing. The authority shall not publish proprietary or confidential information unless it has reasons to do so in public interest and it records the writing of such reason. The authority may send a separate report containing proprietary and confidential information to central government for its information. Where the authority finds or has a reason to believe that any law or professional or other standards has or may have been violated by auditor, it may decide on further course of investigation or enforcement of action through concerned departments. Then it comes to rule number 9, overseeing the quality of service and suggesting measures to improvement. On the basis of the review, the NFRA may direct the auditor to take measures for improvement of the audit quality, including changes in their audit process, audit control, quality of control, and audit reports, and specify detailed plan within the time limits. It shall be duty of auditor then to make a required improvements and send a report to the NFRA explaining how it was complied and with the directions made by the NFRA. The authority may monitor and he shall monitor the improvements made by the auditor and take such action as deems fit depending upon the progress made by the auditor. NFRA may refer case with regard to overseeing the quality of service of auditors of companies or body corporates which are covered under Rule 3 to the Quality Review Board constituted by ICAI or call for any report or information in respect of such auditors or companies or body corporate from such board as it deems fit. The authority may take assistance of experts for overseeing and monitoring the activities. Then it comes to rule number 10, power to investigate, where NFRA has received any reference from central government for investigation into matter of professional or other misconduct under 132(4) of the Companies Act, they can decide to undertake investigation into any matter on basis of its compliance or oversight activities, or decide to undertake suo motu investigation into matters of professional or other misconduct after recording such reasons in writing for this purpose, and it shall forward the matter to division dealing with the enforcement for carrying out investigation and other actions. Further, rule number 10 says, if during investigation the authority has evidence to believe that any company or a body corporate has not complied with the requirements under the Act or the rules of Companies Act 2013, which involves or may involve a fraud amounting to rupees 1 crore or more, it shall report its finding to central government. On the commencement of these rules, the action in respect of cases for professional or other misconduct against auditor of a company is referred in Rule 3 shall initiated by the authority, that means by the NFRA itself, and no other institute or body corporate shall initiate such proceedings against such auditors. However, that no other institute or body shall initiate or continue any proceedings in such matters of misconduct where the authority has initiated an investigation under this rule. The action in respect of cases of professional or other misconduct against the auditor of company or a body corporate other than those referred in Rule 3 shall continue to be proceeded by the Institute of Chartered Accountants of India as per the provisions of the Chartered Accountant Act 1949 and the regulations made under.